Hi, good evening. This is Scott at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. Now, I don't know if you heard, but evidently Tesla wants to put frickin' laser beams on their car as windshield wipers. Now, I love Elon. The guy is a character, and I can't help but think he's channeling a little...
You know, I have one simple request, and that is to have sharks with frickin' laser beams attached to their heads.
Okay, so for real though, they want to put laser beams on the car as windshield wipers. Now, here's what that would look like. So they've secured a patent for this, and I don't know. I wouldn't bet against Elon. That could actually happen. So how can you benefit as an investor from this information? Well, the stock itself didn't really do much today. As you can see, we had a little bit of a pullback to this orange line, the daily 8 exponential period moving average, but it really just kind of chopped around today. So if I was to start a position in Tesla for the first time, what I would want to do is really just kind of get a position close to some of these lines, close to these major moving averages, because at least then you have some clearly defined levels to define your risk off of. Like if I was to buy here this gray line, which is the 21-day exponential period moving average, if I'm buying in the stocks here, I know a decisive close below that level on higher than average volume is probably something that I would want to sell. I'd want to get out of the way and wait for the stock to just kind of reset. But as you can see right here, the stock is about 2.25% away from that daily 8 exponential period moving average. So if you were to define your risk off of this orange line, which is the closest moving average that I have in this chart, you'd really have to be risking 2% to know if you're wrong or not. And so, to put that in some sort of context, if I was to buy 10 shares of Tesla, I would have to wait to see if it would close below this line here to know whether I'm wrong or not. And on 10 shares, that's $200, which isn't nothing. So you're basically risking $200 just to see if you're wrong or not in the trade. So what I would do in that case is just kind of wait for the stock to come back to these moving averages and build a little sideways base of consolidation like it did back here in late August. As you can see in August, the stock popped up through the moving averages. We had a nice sideways base of consolidation and then followed through with a nice move on higher than average volume. So that's what I would kind of wait for on Tesla right now. I'd wait for the stock to build a little bit of a sideways base of consolidation and at least give you a little bit of a floor to use to define your risk, because little bases like this are great because you have a few days in a row where the bears had a chance to push the stock lower but were unable to. So it just kind of gives you a little bit of a solid foundation to define your risk off of when you're initiating a new trade. So I hope that makes sense, and that's kind of what I would look for here on Tesla. Hey, if you are a member of Stock Market Mentor, be sure and check out the new tutorial that Dan did today. It was pretty special. It's all about keeping your account at an all-time high and different strategies that Dan uses to keep your account trending higher. Now, of course, that doesn't mean you won't have slight pullbacks in your account, but we want our account to be trending in the upwards direction with potentially, slightly higher lows along the way. And so that's what Dan talks about tonight in his tutorial. Check your inbox. You're not going to want to miss it. And if you're not a member and you want to check out Stock Market Mentor, click the links, take a trial, and we'll see you on the other side.